Hey guys, welcome back to another video, and today we're going to be talking about a couple stocks. These were subscriber requests that I got that people wanted me to look at these stocks and give my analysis on them, so that's what I'm going to do here. The first stock we're looking at here is Spce, or Virgin Galactic. So what we've seen on this stock back here in December is we actually saw this massive move higher, and then obviously a sell-off when the pandemic came, and then the price has sort of climbed back and actually recovered probably about 50% of this entire move. Now, I don't have that Fibonacci level on my chart because it would look pretty cluttered, but you can draw it here from here and you can see how much of the move we've actually retraced. We're sitting right at the 50% retracement. Although the price did break over the 50% retracement for a couple days, it actually was unable to close above and hold above that level. So it is coming into some heavy supply zones here. If it's able to clear this level, you could see a move up to the 28 to 29 level, and then you could see the price probably reject and then start to consolidate again. There's a couple ways you could look at this stock. So you could look at it as we had this consolidation range back here, and this was a 5-wave move higher right here, and then you had this ABC wave into this falling wedge. So what you should get is from this 5-wave move here to this consolidation range is you should get a move up to the 138.2 to 161.8% extension, which is exactly what happened when it broke that range. You got to move to the 138.2% extension right here at 25.82. It came into some supply there, and it's consolidated a bit. Now, there is some demand zones right here where you have these previous highs. It's possible that the price sees these previous highs, then some buying pressure comes in, pushes it over this downtrend line, and then you see one final wave higher to 28.68. That's a pretty likely scenario. There's a good chance you see 28 to 29 over the coming days or weeks. And what would probably follow that, there's going to be probably some huge supply there. So you're going to get another consolidation range, and then the stock will make a decision on whether it wants to push higher here or reverse trend and then break this trend line here and go lower. So a place where you could probably long the stock is you could shorter term try to long the stock right here and just set a stop if it breaks back below these highs, these set of highs here, and closes below. Or you could wait for this full cycle to complete here, and if you're looking to as a long-term investor to invest in the stock, you're probably going to want to wait for a better entry, which I think a good entry on this would be if we get a back test of this long-term trend line here. That would be a good entry, and you could just ride the trend higher from there with a stop below this long-term trend line. Or if you're a short seller, you could also short versus these highs here, but the only issue with that is it's like a 10% stop loss, and if you're what you'd be targeting on a short would probably be like around 17ish. So you're risking like $2 for $4. It's not the best risk reward in comparison to taking a long position here. The risk reward on the long side is actually pretty good right here. You could long at 22, stop right below, let's say 20, and you'd be looking for a push to about 29. So you'd only be risking $2 for $7. So the risk reward is better on the long side here. I do think you get this one final push. I think this is wave 1 here, and then you have wave 2 here, and then wave 3 right here. And then right now it's in wave 4 and should make a 5th wave higher. And then you'll probably get an ABC down back to this trend line. And if the trend continues, you'll get a break higher. Now I will say there is a level of overhead supply here because you do have these trap buyers up here. And a lot of people want to break even on their stocks. So they're looking to sell the stock rather than buy it. So you do have a level of overhead supply. So it's very likely we could see, instead of this move higher after this consolidation range that we'll probably come into, you could totally see a break lower here and the price heads back to its previous lows. Although that's not what I would expect here. I'd more or less expect something like this. So yeah, that's my views on Virgin Galactic. I think you see 28 to 29 over the coming weeks, followed by consolidation and then either a push higher or a break lower. The next stock we're going to be looking at is, you guessed it, Intel. And so bigger picture on this stock, you have since 2008, this sort of 5 waves move here. So you have 5 waves up here, and then it's possible that this is an ABC wave down, and then you get a reverse higher. The reason I think that is I think there's a level of psychological overhead supply here. So there's a couple ways you could go around trading this stock, but the reason I think there's supply is because you have 4 tests of these lows, and usually when you get a 4th or a 5th test, you're almost always going to break these lows, undercut the lows, then reverse higher, and then actually pop the pivot on those lows, and then reverse higher. So that usually is what's going to play out in these scenarios. And the reason being is that there's too many long positions piled up from this consolidation range against these lows here. So when you get the undercut, it's going to stop everyone out, and then what's likely going to occur is you're going to get a reverse higher. So where you want to look to buy this stock, if you're a long-term investor or even just for a short-term trade, would probably be around 39 to 38. I think you get a backtest of this long-term trend line here, and I think that would be a good place to buy this stock. Or if you think these lows hold, which I personally don't think these lows can hold because I think there's too many long positions piled up against them. If you think these lows hold, you could try and long the stock as close as you can to these lows, and then stop below around 42. So you'd probably want to get long at around probably in between 43 to 44 if we see it, and then you'd want to stop below 42. I do think this is a long-term ABC wave here. I think this was the 5th wave higher. You're going to get an ABC down and then a reversal higher, and you're going to build out sort of a 20-year cup and handle here. I think that's a very likely scenario. The long-term 50% Fibonacci retracement since the 2008 lows is one of the big levels that you're going to want to watch. A lot of times, the price will break below this Fibonacci level and then reverse back above it like the next day. And the purpose for that is to run stops. So I think there's a good chance we see this 50% retracement at 40.91 and a break below that 50% retracement. And then you'll get the reverse higher at around 39 to 38. I think there's a good chance we see something like this unfold. I do think there's overhead supply here and overhead supply here. And I think you get an ABC down, and then this will be the first wave in another 5 waves up of a long-term uptrend. So if you're looking along the stock, I think you wait for a backtest of this long-term trend line here, and then you can go ahead and buy the stock, and we should reverse higher. All right, so the next stock we're going to be looking at here, and the final stock for this video, is actually going to be AMD. And I got quite a few. The person who requested this stock gave a couple other names he wanted me to look at. I'm going to leave that in a separate video for tomorrow. So far we're just going to look at AMD. So looking at the stock in a simple way, this right now is the weekly chart, is you have this long-term consolidation range here, this very, very long-term consolidation range here between 2000 and 2020. And then we actually broke above that range this year when we broke out over 50 a share. So what you'd be looking for after that point is exactly what we saw, right? Is you look for this 138.2% extension. That's going to be your trim zone on where you want to trim a position if you're trading the stock, and then you're going to look for the 161.8% extension. That sits right at 77, which is right where we're at now. So I don't think you can buy this stock right here. I think this would be a very poor entry to get in at 77 a share. I know, you know, you're looking at the stock and you're seeing it go up 20-30%, and you want to chase the stock. But I don't think it would be a good idea to chase the stock here. Where you could look to enter is if this is a absolute tear of a move here, and it's came into its supply zone. So what you would want to look for is a breakout like we saw, and then a back test. The back test is where you'd want to buy. So you'd want to see the price retrace back to this $50 level. And I think if you get that $50 level, you can long against these previous highs here, and we'll probably see something like this unfold. And then from that point, the stock will make its decision on whether it wants to keep going higher or break back down into this range that it was in for the last 20 years. Again, you have to be conscious that this stock does trade at a very, very rich valuation, and all of tech does for that matter. And we are, in fact, in a tech bubble, but that doesn't mean that this stock can't go higher. I just think it's very likely that It doesn't. I could be totally wrong, who knows? Like I said, this stock does trade at a rich valuation. If you want to look to get long the stock, like I said, you have to wait for this $50 level. And if you're, let's say, already in the stock, I would say just stop out below this $50 level and book some profits. You know, it's made a great move. Trim half of the position up and just hold the rest and see where it goes. So now looking at the daily chart, again, you just kind of have this face ripper higher here. And I think if you're looking for somewhere to buy, you have to wait for a back test of this $50 level here, and you actually have this long-term uptrend line here that you can try to buy against as well. We should see something like this unfold shorter term. I think is you'll back test this $58 level, and if you're a very short-term trader, you can try and long against this breakout back here. If we back test it, and then maybe we see something like this unfold, where we'd see some buying off that back test, and then a breakdown and ABC down to this $50 level, and then you'll probably get the reversal higher after that. Now you could take a short position here, but there's not really a place to put your stop against yet. So once the price starts to sort of level off and you get at least a little bit of a drop, let's say back into this gap, then you can try and short as close as you can against this $80 level here, and then you should see a move back down to this $50 range. Anyways, that's my views on AMD. I'm going to go over more of these requested stocks tomorrow, and I hope you guys leave a like and subscribe. Thank you so much for watching.